Hello everyone, my name is CMA. Welcome back to CMA modules. Today we will be recording a video lecture on topic known as adjustments and rectifications. We have depreciation and amortization here. Fixed assets are purchased in the business for long-term use. During the course of their use, every year a part of fixed asset expires. So what are we doing here? We are purchasing fixed assets in the business for long-term use. What are we doing? We are purchasing fixed assets for my business. Suppose I purchase machinery. With the help of machinery I am trying to produce my product or manufacture my product. I purchase laptop. With the help of laptop, computers, what I do, I try to work. So fixed assets are purchased in the business for long term use. During the course of their use, every year a part of fixed asset expires. During the course of their use, every year a part of fixed asset expires. Correct. So as and when, let's take example of our phones. Okay. So I use phone only for social media and my calling purpose. Two things. But still, after a year or two or three, my phone will start depreciating. A part of it will start expiring. The reason is I am using it. Okay, the value which we pay for using it is known as depreciation. That is non-cash value. We cannot see. But suppose I buy my phone for 20,000 rupees, and after a year or two, if I go to the market with that, I'll not get 25. Instead, I'll get little less, 15 or 10. The reason is I have used that phone, and because of the usage, I'm supposed to pay certain amount as depreciation. So during the course of their use, every year a part of fixed asset expires, that is consumed or utilized or lost due to physical wear and tear, passage of time, obsolescence, etc. The gradual decline in the value of a tangible asset is termed as depreciation. Thus, it can be stated that depreciation is a part of cost of tangible fixed assets which has expired because of its usage, lapse of time, etc. The purpose of providing for depreciation is to write off cost of fixed assets over their estimated useful life. It is important to note that depreciation is charged on all fixed assets except freehold land. So we have the purpose. What is the purpose of providing depreciation? Purpose of providing depreciation is to write off the cost of fixed assets over the estimated useful life. Sorry, suppose the useful life of the asset is 10 years. So over the estimated useful life of the asset, I'm writing off a part of the cost, that is known as depreciation. It is important to note that depreciation is charged on all fixed assets except freehold land. The reason is that unlike other fixed assets like machinery and furniture, useful life of land is not limited to few years. We have characteristics of depreciation. Depreciation is a reduction in the book value of fixed assets. Very important answer. You can get it in MCQs, you can get it in long answers, you can get it in short answers. So what are the characteristics of depreciation? Depreciation is a reduction in book value of fixed assets. Such reduction in the book value of fixed asset is permanent, gradual, and of continuing nature. It is reduction in book value of assets. Such reduction is nothing but in book value, but such reduction in book value of fixed asset is permanent, gradual, and of continuing nature. Depreciation is a continuous process that is provided every year because the book value is reduced either due to use or with the passage of time. It occurs gradually unless there is a quick physical deterioration or obsolescence due to technological development. So we have depreciation. Depreciation is a reduction in book value of fixed assets. What is depreciation? Depreciation is reduction in book value of fixed assets. Such reduction in book value of fixed assets is permanent, gradual, and of continuing nature. Is permanent, gradual, and continuing nature. Depreciation is a continuous process. It is not a small process. It is a continuous process. It is not a one-time process. Continuous process that is provided every year because the book value is reduced either due to use or with passage of time. It occurs gradually unless there is a quick physical deterioration or obsolescence due to technological developments. It occurs gradually. It occurs gradually unless there is a quick deterioration. If I'm using it, roughly, or every day, if I'm using it, there will be a quick deterioration. I'm using it for part of my work, there will be slow deterioration. Then we have depreciation, amortization, depletion. Depreciation, the term depreciation is a measure of wearing out, consumption, or other loss of value of a depreciable asset arising from use, effects of time or obsolescence through technology and market changes. So we have term depreciation, and term depreciation is a measure of wearing out, consumption or other loss of value of a depreciable asset. So what is depreciation? The term depreciation is a measure of wearing out, consumption or other loss of value of a depreciable asset arising from use, a flux of time or obsolescence through technology and market changes. It is an allocation of cost of fixed assets as expense over its limited useful life. It is what? Allocation of cost of fixed assets as an expense over its estimated useful life. Depreciation expense is charged on all tangible fixed assets whose useful life is limited. Depreciation is charged on tangible, not on intangible. Tangible means stable, chair, computers, laptops, mobile phones. It is charged on tangible items. So, depreciation expense is charged on all tangible fixed assets whose useful life is limited. They have a limited useful life, 5 years, 10 years, 4 years, 3 years, 2 years. For example, cost of machine is written off over its estimated useful life. On the other hand, useful life of freehold land is normally infinite. As a result, it is not depreciated. So we have 2 to 3 points here. Let us give a quick revision. The term depreciation is a measure of wearing out, tone out, consumption or other loss of value of a depreciable asset. That is first point. Arising from use, a flux of time or obsolescence through technology and market changes. Arising from use, a flux of time or obsolescence through technology and market changes. It is an allocation of cost of fixed assets. It is what? It is allocation of cost of fixed assets as an expense over its estimated useful life. It is allocation of cost of fixed assets as an expense. I am allocating cost as an expense to fixed assets for an estimated useful life. Depreciation is an expense on all tangible fixed assets. So there is an expense for intangible also. Yes, that is known as amortization. For wasting assets also, yes, depletion is the value of wasting assets extracted from quarry, mine, etc. Extraction reduces available quantity of material. For example, extraction of coal from coal mine is depletion of coal stock. So anywhere cost for consumption wearing out is depreciation of tangible assets is depreciation, of intangible assets is amortization, and for wasting assets such as coal, mine, or such type of assets, it is depletion. My coal reduces, my petrol reduces, my gold reduces. They are precious. Methods of recording depreciation. There are two alternative methods of recording depreciation. When depreciation is charged to the asset account, and they are when provisions for depreciation, accumulated depreciation account is opened. So when depreciation is charged against asset, under this method, amount of depreciation is credited to concerned asset account. Depreciation account, being a nominal account, is transferred to profit and loss account. So we have two types of recording methods. One is when depreciation is charged to asset account, and when provisions for depreciation account is opened. When depreciation is charged to asset account, and when you are creating an account and that account is provision for depreciation. Two methods. So first one is when depreciation is charged against asset. So under this method, amount of depreciation is credited to concerned. So depreciation asset will have your debit balance. In front of that, if you credit a depreciation amount, you are bringing the amount of asset down by that much amount. So suppose my asset value is 1 lakh. I am crediting depreciation against 1 lakh by 10,000. So now my asset value is 90,000. Under this method, amount of depreciation is credited to the concerned asset account. Depreciation account, being a nominal account, is transferred to profit and loss account at the end of every accounting period. In the balance sheet, asset is shown at its written down value. Journal entries for charging depreciation and transferring it to profit and loss account are depreciation account to asset account. Depreciation is debit. Debit all expenses and losses. Depreciation is a non-cash expense. You are bringing down your asset value by 10,000 by the value of depreciation. So you are crediting your asset. After that, you are transferring your depreciation to P&L account. So whenever you transfer, your depreciation will have a credit balance. You are transferring where you are transferring to P&L account. Okay. When provisions for depreciation or accumulated depreciation account is maintained, Under this method, depreciation is not credited to the asset account but is credited to provision for depreciation account. So instead of asset, here you have provision for depreciation. Only that is the difference, rest everything is same. As a result, asset account continues to be shown at its cost and the balance of provisions for depreciation, accumulated depreciation account shows total depreciation till date. In the balance sheet, asset is shown at cost less provision for depreciation. Okay, treatment is same. Just instead of asset account, you are crediting provision for depreciation. I'll take a pause, a quick read, then we'll go for methods of calculating depreciation. Methods of calculating depreciation. There are number of methods that have been developed for calculating the amount of depreciation. Some of the most commonly used methods are fixed installment method or straight line method, SLM method, popularly or sweetly known as SLM method, reducing balance method or diminishing balance method, sum of years digit method, sinking fund method, NUT method, insurance policy method. So we have methods of calculating depreciation. First one is straight line method. Under this method, a fixed portion of the cost of fixed asset is allocated and charged as periodic depreciation. Under this method, a fixed portion of cost of a fixed asset is allocated and charged as periodic depreciation. Such depreciation becomes an equal amount in each period. The formula for calculation of depreciation is as under. So we have depreciation value of cost minus scrap value divided by estimated useful life. So you have value of an asset minus scrap value divided by estimated life. You'll get depreciation formula, depreciation amount. Then you have reducing balance method. So under this method, depreciation is calculated at a fixed percentage on the original cost in the first year. And in subsequent years, it is calculated at the same percentage on the written down value. That is book value over the expected working life of the asset. So under this method, depreciation is calculated at fixed percentage. Depreciation is calculated at fixed percentage on the original cost in the first year, and in subsequent years it is calculated at same percentage on the written down value. That is book value over the expected working life of the asset. First you calculate an original cost and then on written down value. Okay. Subsequently, you calculate on written down value. Provision for depreciation account. Provision of depreciation is collected value of all depreciation. So what we do is provision of depreciation is nothing. We sum up all the year depreciation and we add that to provision for depreciation account. Provision of depreciation account is the account of provisions of depreciation. With making of this account, we are not crediting depreciation in asset account, but transfer every year depreciation to provision of depreciation account. We are not crediting, okay, we are not crediting depreciation in asset account, but what we are doing, we are transferring every year depreciation to provision of depreciation account. Every year we adopt this procedure, and when assets are sold, we will transfer sold assets to total depreciation to credit side of the asset account. In simple words, what we are doing here is provision of depreciation is collected value of all depreciation. So we accumulate all the depreciation into all year depreciation into one account. Provision of depreciation account is the account of provision of depreciation. With making of this account, we are crediting depreciation in asset account, but transfer every year depreciation to provision. So again, same thing they have mentioned. What we do is, for provision of depreciation account is nothing. We transfer every year's depreciation to that account. Every year we adopt this procedure, and when assets are sold, we will transfer sold assets total depreciation to credit side of the asset account. Every year what we do, every year we adopt this procedure, and when assets are sold, we will transfer sold assets total depreciation to credit side of asset account. Correct. So when we are selling our asset, we are at that time also we are taking provision of depreciation account into picture. Then only we'll come to know what is the exact value, profit or loss. For calculating correct profit or loss on fixed asset, this provision uses with any method of calculating depreciation. There are following features of provisions for depreciation account. Fixed asset is made on its original cost and every year depreciation is not transferred to fixed asset account. Provision of depreciation account is a conglomerate value of old depreciation. This system can be used both in straight line and diminishing method of providing depreciation. So we have for purchase of assets, providing depreciation at the end of the year, for sale of assets, for cost of, so they have given us journal entries. If I want to purchase asset, I'm purchasing asset and going to a shop and purchasing asset and giving cash. So credit what goes out, debit what comes in, asset is coming in, cash is going out. For providing depreciation at the end of every year, depreciation account debit to provision for depreciation. Depreciation is my expense. I am provision for depreciation. Instead of asset, I'll credit provision for depreciation. Sale of asset, I'm getting something, debit what comes in, cash or bank account. To sale, asset is going, credit what goes out. Cost of asset sold transferred from asset account to sales account. So I'm transferring asset. Okay, I'm transferring asset. So basically, I'm just checking whether it is uh, a profit or loss. So asset sales account debit to asset. Asset is going from me. So it's credit what goes out. And then finally, we'll record depreciation against asset, and then we'll have profit or loss. So then we have disposal of an asset entries. So what is disposal of asset? Again, everything same. Okay, but here we use word asset disposal, asset disposal. Rest everything is same. I'll take a pause, a quick read, and then we'll start from illustration number 8. Illustration 8. We have number of machines. There are 4 number of machines. Cost of machine 90,000, 24,000, 1,05,000, 2,50,000. So cost of machine is also given and number of machines are given. Expenses incurred at the time of purchase is to be capitalized. Estimated residual value and expected useful life in years. So we have 90,000 as cost of machine. Now let us take an example. I have purchased a television from any showroom, TV showroom. So what I did is I purchased a machine or a television for 60,000. They asked me to pay 10,000 as transportation cost. So my value of television will be 70,000. So same thing here. My cost of machine 90,000 and expenditure incurred. So value of total value of machine will be 1 lakh. Out of that 1 lakh, I'm supposed to reduce my residual value, scrap value. So 1 lakh minus 20,000, I'll get 80,000. That 80,000 I'm supposed to divide by 8. Okay, let us check here. So they are using SLM method. So 90,000 plus 10,000, 1 lakh I'll get total cost of the asset minus 20,000 residual value. Okay, so I'll get 80,000. 80,000 divided by 8, I'll get 10,000 as depreciation. 10,000 on 1 lakh, I'll get 10% as SLM rate of depreciation. The rate of depreciation under SLM method. Okay, so this is the thing. Now let us go for one more. 24,000 plus 7,000. I'll record total cost. 24,000 plus 7,000. I'll get 31. Residual value I'll remove. Okay, divided by estimated useful life. I'll get depreciation. Depreciation upon cost of machinery. I'll get 15%. Done. So same way you can complete your sum. Then we'll go for ninth illustration. A machine is purchased for rupees 7 lakhs. Expenses incurred on its cartage and installation rupees 3 lakhs. Calculate amount of depreciation at the rate of 20% per annum according to straight line method for first year ending on 31st March 22 if this machine is purchased on 1st April 21, 1st July 21, 1st October 21 and 1st Jan 22. So they have given us a different period. So based on different periods we are supposed to calculate. So here first thing what I'll do is the machine is purchased for 7 lakhs and installation expenses are 3 lakhs. So I'll have total cost of the machine as 10 lakhs. On this 10 lakhs, have they given me any residual value? No. So they have only 10 lakhs. So on this 10 lakhs, what I'll do is 10 lakhs into rate of depreciation. So rate of depreciation is 20%. So 10 lakhs into 20% into period. So if I start from April to March, it will be 12 months. So 12 months into 12 months, I'll get 2 lakh as depreciation. Then rest everything is same, but July to March 9 months, October to March 6 months, and Jan to March 3 months. So accordingly, period is changing, rest everything is same. You can go through this sum. We'll go for next one. Reducing balance method or diminishing balance method or return down value method, WDV method. Sweetly we call it as WDV method. Depreciation is calculated at a fixed percentage on the original cost in the first year, but in subsequent years it is calculated at the same percentage on the return down value, gradually reducing during the expected working life of the asset. The rate of allocation is constant, but amount allocated for every year gradually decreases. So we have 10th sum wherein on 1st Jan 2019 a machine was purchased for 1 lakh and 50,000 was paid for installation. Assuming that the rate of depreciation was 10% on reducing balance method, calculate amount of depreciation up to 31st December 2021. So we have years, we have opening book value, we have rate of depreciation, we have closing book value. So what I'll do here is for year 2019, 1,50,000 is my total value. On that 10% rate of depreciation. So 1,50,000 into 10%, 15,000 is the depreciation. If I subtract that, I'll get 1,35,000. Now next year, I'll go for 1,35,000. Remember, we studied that 1,50,000 initially I'll give depreciation on original value, that is cost value, and subsequently I'll give on balancing method. Balancing value, I'll give my depreciation. So 1,35,000 into 10%, 13,500 will be my depreciation. If I remove this, subtract this, I'll get 1,21,500. 1,21,500 into 10%, 12,150. If I subtract this, I'll get 1,09,350. So that is calculation of 10th sum. Then we have sum of unit method, depreciation for the period, production during the year, estimated total production. We have 11th sum. A machine is, so sum of unit method is, they have given you the formula. Production during the year, whatever is the production divided by total production. So a machine is purchased for 60 lakhs, estimated life of which is 10 years, residual value is 4 lakhs. Expected production of the machine is 2 lakhs during its useful life. Production pattern is as follows. So we have year, we have units. So compute the amount of depreciation for each year applying sum of units method. So we have year 1 to 2. So see, 20,000 per year. 20,000 divided by 2 lakh is your total production. So 20,000 divided by 2 lakh, you'll get 5,60,000. So this 60 lakhs minus 4 lakhs is nothing. 60 lakhs is the purchase value of your asset minus 4 lakh is your residual value. So you will get 5,60,000. Then you have 3 to 6 years. Same way, year 15,000 is your total depreciation for that year. Then you have 25,000 as total depreciation. So please go through this sum. Then we'll take illustration number 12. Here in this sum, they are asking us to prepare a statement of depreciation. On 1st Jan 2019, machinery was purchased for rupees 80,000. On 1st July 2020, additions were made to the amount of 40,000. On 31st March 2021, machinery purchased on 1st July 2020 costing 12,000 was sold for 11,000. So whatever we were studying about, same thing we will be doing here. But what we are doing here is we are presenting our sum in a statement form. Okay, in a statement form. So on 1st Jan 2019, machinery was purchased for 80,000. So we have cost of machinery as 80,000. Date is 1st Jan 2019. Book value is 80,000. On 1st July 2020, additions were made to the amount of rupees 40,000. So what we did, we made additions to the amount of 40,000. Okay, on 31st, so we have second machinery, that is the cost of second machinery is 40,000. Now we have on 31st March 2021, machinery purchased on 1st July 2020 costing 12,000 was sold for 11,000. So on 1st July 2020, costing 12,000. So on 1st July 2020, we purchased this 40,000 machinery, right? So a part of the machine, that is part of the machine which was purchased for 12,000, it was sold for 11,000. 11,000. It was sold for 11,000. Okay. So this 12,000 was sold for 11,000. See, they have taken 12,000 sold for 11,000. And on 30th June 2021, machinery purchased on 1st Jan 2019 costing 32,000 was sold for 26,700. So 32,000, they are talking about this part of the machinery. Okay, my first machine 32,000, it was of 32,000, it was sold for how much? It was sold for 26,700. This is the sale value. On 1st October 2021, additions were made. So again, they purchased a machinery for 20,000. Okay. So now what we are supposed to do, we are supposed to find out the value of the machinery, and depreciation are to be provided on diminishing balance method. So obviously on 48,000 and on 32,000 you will provide depreciation at the rate of 10%. You will get 43,200 and 28,800. After this, what you will do for 2 years, this machine is there with you for 2 years. You purchased in the month of 19 and after 2 years you are selling it away. So again for second year you will give depreciation. Okay, 2.5 years, sorry. 2 years and 3 months on that 3 months. So after that again on 3 months here and for 12 months in 48,000 part, you'll give depreciation amount and you'll make a sale of this and you'll earn a profit of 2,076 rupees. Okay, here this part 48,000 part of the machinery is still there in your balance sheet. Then you have 28,000 and 12,000. So in the same fashion, you are selling this 12,000 part of the machinery, but 28,000 part of the machinery is still there in your balance sheet. And 20,000 part of the machinery, you are providing depreciation for the respected period, and balance part is there in your balance sheet. Okay. So after preparing the statement, you are posting in your machinery account. So this machinery account is nothing but purchase of machinery and depreciation. If you see here, they have given you journal entries also. So if you check the journal entries, same way machinery account will attract a depreciation and machinery account will attract purchase entries. So whatever you are purchasing, cash or bank account to machinery account. Okay, cash or bank account to machinery account. So under machinery account, you will get machinery account to cash or bank account. Cash is going out, machine is coming in. So machinery to cash or bank. So under machinery account to bank, depreciation is an expense. Depreciation account debit to machinery. So under machinery, it will be by depreciation. That way you can complete this account also. I hope you are comfortable with this lecture. From sum number 13, I'll prepare one more video lecture wherein we can complete sum number 13 and balance part of the sums, balance part of the chapter. Thank you.